Nike is one of the most recognized brands in the world, but I always say a great brand or a great company doesn't equal a great investment. And I always say don't invest in what you love. I mean, if you love Nike shoes and you bought Nike stock just because you like the shoes, you lost much more than the cost of the shoes. You lost about 77% over the last 5 years. It's been absolutely brutal. I've been talking about Nike since 2023, 2022, and I did a video and I said my target was 65 when I was trading above $100 back then. Well, now it's trading at $38 per share, and I think Nike stock could finally be a buy if you're interested in the company. I think the worst case scenario is priced in at the current valuations, and I think the stock is very, very interesting, and I'm gonna tell you why. Now, before I get into my analysis, I just want to talk a little bit about what really went wrong with Nike and how I was able to recognize it so early and how obvious it really was. Now, back in 2020, 2021, we were locked down and we were getting a lot of unemployment as stimulus checks. A lot of people were getting the stimulus checks and a lot of things, and we had a lot of savings because people couldn't go out and spend. So we had record savings in the United States. Here comes 2021. As the world opened up, people started going out and they have a lot of savings. So they went on Carnival cruise, they bought, the Peloton, and they bought a lot of Nike shoes. So Nike's inventories has started declining in 2021. Nike, Estee Lauder, Elf Beauty, a lot of those, you could say recreational kind of brand, discretionary brands, they mistook this temporary pumped up demand for a permanent kind of demand. So a lot of them have started to increase production to meet the demand. But once the savings were gone and the credit cards were maxed out, people couldn't buy those $200 Nike shoes anymore. So the inventory started increasing. And back in August of 2022, November, Nike was sitting at record inventories. Now, back then, the stock was at about $140 per share. And it was just so obvious to me. Like, whenever you have such a setup and you have a lot of something that you want to get rid of, and there's clearly a demand problem, what do? You market it a lot and you discount the price, which is really bad for margins. And this is what Nike had to do. They had to do discounts and they had to change their marketing strategy, because I know a lot of you guys know what I'm talking about. I can't talk about it on YouTube, but they made some mistakes in advertising and, they lost some popularity in the United States and other places. And they had to fix all of that, and margins have declined for about 4 years right now. And the same thing has happened with revenues. But whenever, again, you have a lot of inventories in such cycle, it's really obvious that it wasn't a good investment. Now, I think the story is different. In terms of their last quarter, they put up 20 cents in earnings per share versus 13 cents. Now, that's an amazing beat, but some of it was due to the tariff refunds, because Nike suffered a lot in tariffs. They manufacture a lot in China and in Asia and I think in Malaysia or Philippines or somewhere, and they were hit by the tariffs. So they got some of the refunds, and it helped them a little bit on margins. But revenues was very strong, actually much better than expected, which is pretty good for the company. But if you look at the headline number, it's still down about 2% on a currency neutral basis. Now, that's much better than the previous declines of 10 and 12%. So as things have been getting better, the CEO was able to stabilize the revenues. They're no longer declining like they were declining before, which is great. He was able to get the United States market back to growth, and Nike is growing again in the United States, 1, 2, 3%, but at least they're growing. Now, the weakness in Nike sales mainly comes from China. Their China sales have been plummeting like crazy. Over the last quarter, it went down from 1.6 billion to 1.3 billion, and their sales in China have been pretty much flat since 2020. This is really, really bad. But whenever you have such a chart, you also have to look at the economy of the underlying country. And if the economy was just weak and they were in a 5-year recession and people didn't have money to buy such things, then you would say, okay, it's not a brand issue or it's not a Nike issue. It's just the economy which will recover. And in this case, it's much more understandable. But if you look at the total sales in China, the sportswear market has more than doubled over the past decade, and over since 2020, well, their sportswear market has increased a lot. So sales have been increasing in terms of China, but Nike's sales are falling, while their competitor Adidas, which is a strong competitor, have been slowly, generating more revenues in China since 2022. So that's an interesting dynamic where Adidas is gaining market share. Nike, I should say, China's sportswear market is growing and Nike is declining. Well, that's clearly a Nike problem. And I had a contributor on CNBC, is some kind of a consumer research firm from China. And she said that in a way, Nike has just become irrelevant. I don't think young people can remember what is the last new things they've done. But if you mention Adidas to them, they will tell you about their pet clothes, pet jerseys, or their China jacket. So apparently Adidas has been gaining a lot of popularity in China, while Nike has been losing popularity. And it's going to be very hard to turn this trend around. I think especially as Nike is considered a United States, US company in general. That also hurts things a little bit in China. But still, I mean, I hope they can pull it off. But so far, it's been really bad for Nike. But maybe they can pull it off. We'll have to see what happens. Now, in terms of the dividend, it's trading at 4.2%. This is a record for Nike. I don't think they ever yielded a 4.2% dividend. And the dividend is actually safe because the free cash flow yield is about 5.3%. So you have a 1% difference between the dividend yield and the free cash flow yield. And Nike can use this 1% to do buybacks, to increase the dividend, or even to pay down the debt. And they have a good credit rating so they can refinance. And I'm not really worried about Nike's debt in general. And I also believe the dividend is safe for now. And by the way, I'm using Fiscal.ai to come up with all those charts and all the Adidas sales and the China sales, which not a lot of companies have. And if you want to try it out, they give you 15% off if you use my link in the description. But I do believe the dividend is safe. Now, in terms of the multiple, this is where things get interesting. And Nike is trading at a record low multiple of about 22 times forward earnings. Now, 22 times might sound a little bit rich for a sneakers or a shoe company, but it was even crazier because near the top, Nike was trading at about a 55 times earnings multiple, 52 times. How in the world did Nike get to 52 times earnings? I still don't know. I did a lot of research and I couldn't figure out why people were paying 52 times earnings for a shoe company. But this is why investing is so fun, because we're here to take advantage of irrationalities. And irrationalities happen in both directions, on the upside and on the downside. And I think 22 times earnings for Nike is fair and is even more than fair. And it's looking very attractive to me. Now, if we look at the analyst numbers, they still expect Nike to suffer a little bit in fiscal year 2027 with an 18% decline in earnings per share, and they still expect margin to suffer, but they expect a margin recovery in 2028 with them growing about 33%, which is highly achievable because they're starting off a very low base in terms of their margins. And if they recover margins, they can easily do 33%. After 33%, they're expecting about 18% in 2029. I also believe this is fair, which is about 271. Now, I took the 271 and I added a 15% growth between 2029 to 2031, which I also believe is fair. I got about $3.58 per share, which again, I believe it's highly achievable because it wouldn't even equal the top in Nike where they made about $4 per share. So even by 2031, they're unlikely to get back to their 2021, 2022 high with only making $3.58 per share. But if we look at the multiple today, again, it traded as high as 50 times, the average is 33 times, and now it's trading at 22 times earnings. Now, here's my calculation on Nike. I'm going to take the $3.58. I'm not going to use 22 times. I'm not going to use 33 times. I'm not going to use 52 times, but I'm going to use 20 times earnings. It never traded there. So let's assume it trades at 20 times earnings by 2030, 2031. This is about $71 per share. The current price is about $38 per share. This is about an 89% upside on Nike over the next 5 years, not including the 4% well-covered dividend. So this is with the dividends about a double over the next 5 years while using 20 times earnings. Now, if for some reason Nike was able to come up with some kind of a game-changing product and they get back to 33 times earnings where they used to trade at, that would be about $118 per share, and the current price is about 38. This is about 210% on the upside over the next 5 years, not including the 4% annual dividend that I believe is well covered. So I think even on 20 times earnings, using some fair estimates, Nike is clearly undervalued. I see at least a double over the next 5 years. I think if you're someone that's interested in owning Nike, I think the stock is very attractive. For me personally, I like to buy businesses that people need and not just want. So I focus more on necessity-based companies. But if you're interested in Nike, I think the stock is undervalued here. And that was my analysis on Nike. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.